Let's catch our breath and invite our market master for the day, Tushar Pradhan, the CIO of HSBC Global Asset Management, joins us now. Good morning, Tushar. Thanks much for joining us. Well, lay out the FII mood. We have seen fairly decent FII numbers over the last 2 days, and even if you deduct for the potential purchase of the Hero Moto shares, it is still a fairly robust 700 crore, 500 crore that we are getting. And in any case, even buying Hero shares is an indication of support for the markets and for stock valuations. You think FIIs will remain cheerful, or will the budget be a very big thing that they will watch out for?
I think there is a grain of truth in both of the statements you're making. First of all, let me just kind of claim the fact that it is very, very difficult today, if you look at internationally, spots where you think investments will go your way as in up. There is a lot of geopolitical unrest across the world, and especially the countries that we have been looking at, the BRIC countries especially. I think all of them except for India at the moment are pretty much under pressure. If you look at allocations across emerging markets as well, except for some parts of Asia, there doesn't seem to be any bright spot. So the bright spot today in the world is clearly the US, followed by the UK to a little extent, but then really nothing else after that. If you look at India, on the other hand, I think you're looking at a very interesting situation developing. And the budget obviously is a very, very significant impact to what this new story will come out to be. So I think in both cases, the foreigners, the FIIs seem to be very keenly watching what's going to happen. And they are definitely going to be interested in if it appears that this is a reform-oriented progressive budget.
Okay, no, I'm asking you just to continue this argument. That the Q3 numbers were actually a disappointment, and we saw more downgrades than upgrades after that. Nevertheless, we have not seen the FII tap shut out. Will they also take the budget in their stride? I mean, budgets can do this much and not much more. So do you think the FII excitement with the budget is palpable but not seminal, and that we should count on continued FII flows into the country?
No, one can never really count on such things. But all I'm saying is that if you look at the comparative scenario, even if the fact that the earnings have not been delivered for the third quarter, and maybe FY15 also might be somewhat less than consensus, if that happens to be the case, I don't think the entire India story is to be written off for that reason alone. If you look at earnings growth elsewhere in the world, I think it's a lot weaker than us. If you look at the GDP situation, I think the new numbers you can debate till the cows come home. But the fact is that this kind of growth of rate of growth rather, is not something which is seen anywhere else in the world. So I think we tend to be a little more let's say inward looking, and we try to kind of bash our own industries for not doing well for this year. But I think there were significant reasons for that. If the budget actually indicates that this environment is going to change in any significant manner, and I think we have already seen the start of a little bit of that coming forward, I think earnings growth is a matter of time. I think the markets also give you a signal ahead of when the earnings actually need to start to go up. So I don't think we need to wait for the numbers to really decide whether India is an exciting market to get. And I think that's what the FIs are looking at the moment.
Okay. By the way, just watch out for the bank nifty. It's now down 1.5% and is severely underperforming the index. In fact, a lot of stocks like ICICI Bank, Axis Bank, etc. are coming under pressure now. Tushar, hi, good morning. You just mentioned that a lot of funds are allocating money or interested in the US and the UK markets. So in that sense, do you get a feeling that India could underperform the developed markets by the end of this year?
Well, that's a difficult call to make. It's difficult to call markets how they move. But if you look at what has been happening in the last 3 years, clearly the developed markets have done a lot better than emerging markets. The move away from developed markets into emerging markets were expected somewhat, in some time. But the overhanging Damocles sword is the rise in interest rates in the US itself. And that will make sure that equities will underperform if interest rates either come a little ahead of expectation, the hike that is, or the fact that it is something more significant from the perspective of slowing down the economy in the US itself. So I think there are a lot of negatives out there, but in the entire sum of how we look at equities in India, I think no matter where the hike in the US interest rates go, I think the stage is pretty much set for an economic recovery to happen in India for the next 3 or 4 years. I'm not talking about next year, I'm not talking about the next 6 months. But if you look at it from that point of view, it appears that India is set for some sort of economic recovery based on growth and pickup in GDP numbers. And if that seems to be the case, I think that's where most of the FIIs will be very keenly looking at. If you look at developed markets, I think after a certain point, after the bounce back, after some time, it's not possible for these economies, given their demographics, to sustain that rate of growth. So I think the developed world is in a structural decline, but a cyclical upturn at the moment. And in India and the rest of the emerging markets, it may be a cyclical decline, but a structural upside. So I think that is something we need to keep in mind when we look at it from a longer term perspective.
Okay. What would your stock or sector preferences be now that you are betting on the cyclical upturn? Would you dare to buy the PSU banks in spite of the numbers they announced?
Well, PSU banks is a very specific area in the markets, but generally, if you look at where abnormal returns are always made, is where we see significant discounts to the intrinsic value. And if you look at the fear today in terms of why the valuations of cyclicals, of public sector banks, or generally companies which are much below their averages are trading at, the reason behind that is there is a lot of uncertainty regarding how they will actually work out their problems. And if you look at the situation and you try to put a price, do you think that these businesses are going bust? I think that's a question that most of the valuations appear to be telling you. And I think that's value there. So I'm not saying that they are going to be bouncing back and be robust in health. I'm just saying that it's a differential between what valuations appear to be right now and what they can be 6 months, 1 year, 2 years down the line. I think that's where the advantage is. Obviously, the rest of the economy where the visibility is much higher, the cash flows are stronger, the prices are already indicating that. In fact, there is a little bit of a premium there. So I think if you want to make money, I think it's very important to focus on what is the intrinsic value given the problem. So we're not saying that the problems don't exist. We're not saying that the problems will get over. We're not even saying that they will go back to robustness or the kind of profitability that other companies display. I'm just talking about a difference in valuation. So if you look at the cyclicals as a pack and you take defensives as a pack, the differential in valuations on a long-term historical basis continues to be very, very wide. And I think that's where the portfolios have to be positioned for. So I'm not saying you take a 0 or 1 bet. You don't go one way or the other. But I think clearly the portfolios have to be taking that risk along the way now.
Okay. How do you approach some of these metal companies like JSPL, Tushar? I mean, not that company specifically, but many of these companies that have now, solved their coal procurement problem for good. Are those stocks a buy?
Well, again, I will not make any recommendations as such, but I think the entire materials pack was bogged down for many reasons. One is that the international prices of commodities was extremely high. Second is we had very intrinsic issues regarding regulation and all of the things regarding the coal block allocation, so on and so forth. I think a lot of these things are getting corrected. And the price for which they had fallen to was because of all the big dark clouds which were around them in the past. If you look at commodity prices, they have crashed. If you look at the regulatory structure within India, I think it is towards the mend. If you look at uncertainty, I think that's a lot less uncertainty today than it was before. But if you look at the prices have adjusted a little bit, but whether they have really adjusted fully to what the prospects for these companies are in the next few years, I don't know. The other dampener, of course, to this story is the fact that the global economy is slowing down. So in a sense, they also make metals. So they have raw material as an ore, but then they eventually make metals as well. So the pricing power is also not something which is in their hands. So in an overall sense, there is softness in the metals pack. But I think clearly there are a lot better days ahead for them than what they had faced in the last few years. So again, I'll make a relative call. I think there is an opportunity there, but it's not an absolute opportunity.
Actually, Tushar, we just have to draw your attention to the markets at this point in time. I know you're not a person who looks at a tick-by-tick trade or even an hour-by-hour trade, but at the moment the markets have actually lost a bit of nerve. Wasn't at all indicated in early morning trades. We didn't get that kind of cues, global cues at all, nor did we get late evening cues yesterday of this kind of a nature. 1% cut almost on the Sensex. It's down 282 points as I speak. Nifty is down 78, 77 points as I speak. and all the big boys are leading it down. ICICI Bank down almost 3%, 2.8 down. Reliance down 2.3%, but that's a specific cloud on that stock. Then 1.7 down on Tata Power. HDFC, another tall boy as far as contributions to the index are concerned. That one is down 1.5%. Axis 1.6 down. Coal India 1.5 down. SBI 1.4 down. Bharti Airtel 1.2 down. Power Grid 1.1, NTPC 1%, Kotak Mahindra almost 1%, Wipro, HDFC Bank all down about 0.8, 0.9. The point I'm trying to make is that it's across the board, though the bank nifty can be accused of a larger guilt for this fall. It has been pretty much across the board. Okay, now there is a bit of a support coming in at that 8820 mark. Not a whole lot, but just a floor coming in at that point for the nifty. Tushar, you think this market, barring these minor gyrations, will continue its uptrend? Is there anything worrying you about the market's short-term position?
Well, markets are always worrisome, so that's not something that we can get rid of. But the whole point I want to make is that, as you mentioned earlier, the earnings picture is not something as expected. And at the moment, the market seems to be pricing in much of the future rather than what's happening on the ground. So when you have something like that in a market, you're always vulnerable to news. You're always vulnerable to an event which suddenly the market will realize, oh, I'm trading a lot higher than what I should be because my expectations are now not going to be really met. So whenever there is a lot of the future in the market, so it depends even in a stock price, when you're discounting much of what's going to happen in the future in the price, the volatility is likely to be high. And I think in this year, till we get some very solid cues in terms of how the earnings is going to shape up, what is the nature of the recovery, how fast is the recovery, and how fast do interest rates come off domestically, and how slowly they come off in the US. I think there is so many outcomes which is really dependent on how the future looks like. So I think in that case, what you see today is more or less, if I would try to make a guess, what's going to happen for a while now, till well into the second half of this year.
All right, Tushar, we leave it at that. Thank you for your thoughts and your time as well.